morning, investors. Good morning, warriors, and welcome back to today's Christian Market Watch. This is your host, Chillie, and today we have so much to cover, and I just wanted to share a lot of that with you to help you navigate through the crazy, chaotic economy that we have here, and it's just getting crazier, to be honest, this morning, as we will see. But to begin with, first thing today, I'm going to answer a question that one of our viewers actually has. So this viewer was asking, what is a US 10-year treasury yield or a bond yield? And I don't want you to be unaware, so I just want to explain the different asset classes that we are covering in all of these updates, just so you know. When we're talking about gold, silver, and we're talking about stocks and bonds, we talk about the Dow Jones, the indices, we're actually talking about different types of investments. Let's go to the whiteboard. Okay, so these are the investment classes that we have. When we look at the global economy, no matter which country you're in, pretty much all the things that we can invest in fall into these big investment classes. People don't really teach us these things, hey? But when we're looking at the global economy and looking at news and stuff, we're looking at a few different moving parts that together form the whole system. Now, right now, you and I know that this system is under a lot of the devil's influence. But this is not to say that God is not looking through all of this and looking through all of that to bring about his own financial system, which is going to be quite different from these asset classes. So when Yeshua comes back, he's going to use a very different system. For now, when we talk about the S&P 500 or the ASX 200 in Australia, when we talk about the Nasdaq, the Dow Jones, we're actually looking at this sector of stocks and a lot of people put stocks and bonds in these two circles here in the same sector, but I personally do not do that just because of who is actually behind these sectors. So when you look at stocks, you're mainly looking at companies, and companies a lot of the time include most of the private sectors. And obviously there's some companies that might be, owned by the governments and stuff like that. Sure, and that's also included in these. But largely you can think of the stocks as the private sector, the free market, or what's left of it. We know it's not free anymore. Entrepreneurs, the company owners, the small businesses, they all fall under stocks that have gone public. Obviously there is companies that are privately owned, they're not for trade, so we can't invest in them for assets, so that's not even in this picture. Then we come to the bonds, and bonds are usually issued by the local country's governments. That's how they used to manipulate the market. So if the government wants to affect the stock market or cryptos or commodities or real estate, they basically adjust the bond rates. If you're like a hedge fund manager, you would look around into all of these different classes and see which one's more worth it. And for example, if the bond yields are really high, then you might think it's not worthwhile investing in real estate or stocks because it's not giving you a return high enough compared to the bonds. And so things move in and out of the bond market. The US 10-year treasury bond is basically a bond that the US government issues with a 10-year maturity. So it's kind of like a long insurance policy that lasts for 10 years, and every so often, I don't know if it's every quarter or every year or something, it pays you a dividend. So I don't invest in bonds, so I don't know the details that much. We could probably Google that. But basically, we're looking at the 10-year bond as a way to think about what the US government thinks interest rates trends are going to be like in 10 years time for the long term. So that's how we are looking at this. So when we're looking at bonds, we're looking at long-term things, especially when we talk about the 10-year. Obviously, the bonds that mature a bit shorter, and there's a 30-year bond as well, but we just use 10-year as an indicator. In Australia, the bonds are issued by the Commonwealth of Australia, the government of Australia, by the Australian Office of Financial Management. That was a mouthful. AOFM, that's what it is for short. So the AOFM acts on behalf of the Australian government to issue Australian bonds, and obviously there there are other powers in different countries issuing that on the government's behalf. So the government itself doesn't issue that, but they have like an office to issue it for them. So that's how it usually works. And then we look at the real estate, and I like you to think about real estate as something real. Now, a lot of stocks and the stock prices are based on investor opinions. So when investors are fearful, the stock prices go down. When investors are not fearful, the stock prices go up. Sometimes irrespective of what the actual company's performance is. So, there is a very heavy opinion based thing going on in the stock section, but in real estate, it's really interesting because you can drive past the house, the commercial factory, the storage facility, whether it's commercial real estate or retail real estate, your average 4-bedroom, 2-bathroom house with a little yard and a dog. That's all in here. Maybe not the dog. And I like you to think about real estate as something real. You can touch it, you can drive past it, you can see the condition with your own eyes. Now, a lot of things in the stock market you can't see. And then you get to the next class, which is commodities, which is basically what people use and consume, right? And these are things like precious metals, gold and silver. Pardon me if my throat's a bit croaky today. Under commodities, we have precious metals, which is gold and silver. And gold's main use is as money. But gold is also used as jewelry, so it has some commercial use just for beauty and worth, like it's a store of wealth throughout the generations. So if you were in Egypt back in Yeshua's time or in Abraham's time, and you had gold back then, now that gold is still worth a lot. But if you had, Egyptian dollars or whatever back then, probably that's all gone. You wouldn't be able to find it anywhere right now. Gold is a store of wealth throughout the generations. Every rich person owns that. They just don't tell you that they have that. Silver is kind of like the little sister to gold. Gold stores large chunks of wealth as shown by its price, about 2,500 Australian dollars at the moment. And silver is more like the little sister. So if you want to go to the shops to get bread, you just spend silver, right? So if you want to buy a house, you probably use gold, that kind of idea. And silver is largely used as a manufacturing ingredient in a lot of electronics, so it has industrial use as well. So a lot of these commodities, either you eat them or you use them for industry. So energy, crude oil, renewables, and other kinds of energy, gas, whatever, that is also part of commodities. So when we say we are having an energy crisis or a food war or food shortage, you will understand that goes under the commodities section of the global economy. This part of it is suffering. That's how you're thinking about it. When we have sanctions, Ukraine versus Russia, and they want to ban oil, and also as a result, oil has a lot to do with grain exports and, barley, whatever, beans, whatever, avocados, this kind of things, because basically you need oil to run the car to be able to ship things from one place to another place, so they're all kind of part of commodities. And then lastly, I want to touch on cryptos. A lot of people put cryptos under stocks, but I kind of, as a millennial kind of thing, I would actually put cryptos in its own class, because I believe, and also digital currency, just because I believe that is going to be a new type of money going forward. And, obviously people are using that in a small way now, but I think that it's going to be more widespread. And it's also a technology kind of thing, which falls under this tech stocks kind of thing, but it has the dual function as money, as well, like digital money. So, and also if you're in Bitcoin and Ethereum and this kind of stuff right now, we call that decentralized finance. We call that kind of like the people's money. So if bonds and stuff like that the government's way of having money. And obviously there's also cash. Okay, so we didn't put cash in here. The cryptos would be the people's money. So gold is thought of as God's money. So what God created in the natural reserve of the earth for people to use as a medium of trade. So that's why we call it kind of God's money. As Robert Kiyosaki would put it like that. Highly recommend you go through his Rich Dad radio show if you haven't listened to that. When I first started out learning about all of these things, I listened to that radio show a lot, and I still do now. But I've just listened to a lot of people nowadays. And so God's money, government money, people's money. So hopefully that helps you understand. And so now let's go in to look at the indices for the day.